Good morning and welcome to my YouTube channel, philsgang.com, and my radio show, philsgang.com. Well, we saw what happened last week with the CPI. We had this 1,200-point rally, but you got to remember what's going on. The 1,200-point rally is because the institutions who have been short, when I talk about institutions, I'm talking about the big hedge funds, the big insurance companies, the big investment banks. They've been shorting the market, which they should be. So when they got this number that was 3/10 less, 3/10, that's like you say over a year's time on a package of hot dog, 2 cents. So everybody went nuts, covered their short position, 1,200-point rally, and then you had everybody chasing the market. First thing you do is anytime you have a report like the CPI last week or the PPI today, where you have these big gap ups, never chase a stock. Don't do that. Let it pull back. And if it makes a new high, then you buy. But let's get back to why I'm here. The market will continue doing these short covering rallies. And they're going to try to do these short covering rallies and they're going to be using the excuse that now that the Republicans won the House, they're going to make a lot of changes. So gas comes down. And so it's a feel-good rally is all it is. So we've been long our positions in value stocks, like our gold stocks. We've been long gold stocks. We're doing well with that because it's a value stock. We've been long our oil stocks. We've been long our bank stocks, all good value stocks. And those do well when you see the inflation number, start coming down. What we watch is my members, I always tell them to watch TLT as a symbol. It's a 20-year treasury. And if you really want to know what the market's going to do, watch that. And as I teach them or tell them that when you start seeing the TLT start going up, that means the yields are going to start dropping and the stock market's going to rally. So with the CPI and now the PPI, what that does is that makes people buy treasuries, and when the treasuries start going up, then they buy the treasuries, TLT, and then what happens is the yields start going down, and the more yields go down, the more the stock market goes up. So we're going to continue with these short covering rallies, but be very, very careful. Do not chase these rallies. If you're already in the stock, as I tell my members, so if a stock was at $50 and opened up today at $70, you don't buy it at 70. You don't add to it at 70. If you got in at 50, you sell into it. You take some profits and keep some shares and just put a stop in. So this is going to continue probably up to Thanksgiving, and then they're going to try to roll it over to Christmas. We have a Christmas rally that always starts 5 days before Christmas and ends on January 2nd. But the bottom line is this, that they've been masking a lot of bad news. Take like the job numbers. They're telling us how great jobs are. That's not true. If you take a look at the numbers pre-pandemic, and you look today, we still are missing 8 million jobs. I'm not talking about the pandemic. I'm talking about before pandemic. We're still down 8 million pre-pandemic. People aren't working. That's bad news. And we also have the situation where when you look at inflation, this October, we're paying $800 more this month for the same goods we bought last October. Looking forward, real inflation, we're going to be paying $9,000 more in 2023, 9,000 more in 2023 for the same goods we bought in 2022. So there's a tremendous amount of inflation. You just don't get rid of it just because they come up with a PPI number and a CPI number. It was all fake anyways. These numbers are fake. They're not true numbers, They're easy numbers to manipulate, just like the job numbers. So my take on the market, we're going to continue to, when the market opens, we lose our opinion so we don't lose our money. Because we have the skills not only to buy stocks, but to sell short, then we let the charts tell us what to do. If the money's going in, we buy. If the money's coming out, we sell short. Unfortunately, 80% of people don't do that. All they do is buy. They don't sell short, and that's why they lose money. So check out my gang membership. You can check it out. You get 10 days free. So at least you learn how to sell a stock short, and you get to understand how a stock market works, like the bond market. 99% of people don't even look at the bond market before they buy a stock. If you look at the bond market, you would know whether I should buy the stock or not buy the stock. If you look at our Pro 3 chart, that tells you, should I add to my stock or shouldn't I add to my stock? So it's all about, just like a carpenter or a plumber. If you have good equipment, you're going to do a great job. You're going to build a great product. It's the same thing with investing and trading. Okay, if you have the good charts, the best charts, and I think ours are, of course, our Pro 1, Pro 2, and Pro 3, you're going to have a better job. It's going to come out better. You're going to have better quality. So that's it. So I still think we're going to go down 20% from where we ended up at our low, the S&P. I think we're going to rally, then we're going to come back down, meet that low, and we're going to drop another 20%. That's my take because, again, we have all this inflation and we got a problem with the job numbers, which is masking a lot of stuff. And it's just not there. The value of the stocks are so friggin' out of whack. And now they're going to get out of whack more with these rallies. That the big investors, at the end of the day, they're not going to be there to buy them. And then what's going to happen? They'll pull the rug out of this market and it'll go down. But in the meantime, let's make money on these short covering rallies.